So we're back. It's been a couple of days, weeks, maybe even a month since I've made a YouTube video, but I've been busy, bro. I've been working, grinding away. But I thought I'd make a different type of video today, something a little bit more educational, a little bit more informal for those that want to maybe get a better understanding of something. I don't know. So, a lesson of the day is, from the title, I bet you can tell, understanding liquidity. That's not a right spell, right? None of it is. Liquidity, that is the lesson. So, let's get straight into it. If you guys want to see more of this type of videos, let me know, because, I guess I kind of enjoyed making all this. This took a long time, bro. But, here we go. So, let's first understand the dealing range. So, in the markets, we have bullish, bearish, and sideways dealing range. Ideally, so this is bullish, this is bearish, and then we have the sideways where we're just kind of consolidating, no real intentions in the market, just building liquidity. So for high probability conditions, we want to be looking for other bullish and bearish dealing ranges. So how do we know what's a bullish and bearish dealing range, right? So that is when we make a swing high and a fairly swing low and a swing high and so it's sort of what I have here, right? So once we understand what our dealing range is, we can now get an understanding of external range liquidity and internal range liquidity, right? So what is external range liquidity? So external range liquidity is either swing highs or swing lows. Pretty simple. I think it makes a lot of sense. It was what really helped me get an understanding of where liquidity rests. Liquidity rests in many different areas, and that's why I've made a couple different things that maybe you can now use to get a better understanding. But this is the basis of it. ERL, IRL, external range liquidity, internal range liquidity. So in the internal range liquidity, this is any imbalances in the market, and we usually see imbalances in the market when we see the market move with intention and strong bullish or bearish pressure, right? So once we get an imbalance, it most likely is going to be one of many things. It's going to be a fair value gap, bullish fair value gap, bearish fair value gap, or a liquidity void or a liquidity imbalance. It's very similar things. But I'm sure that if we go into the market, we could probably find one straight away. Okay, so perfect. This is a great example of a liquidity void, meaning that there's an imbalance in price and we are likely to come back into this area of price at one point to balance it, and either to show resistance in this level or show disrespect and continue trading lower, seeking fairly swing lows, right? Let's see if we can find a liquidity imbalance. So this is a liquidity imbalance. It's when we have the bodies not touch, but it's only wicks overlapping, and that is a liquidity imbalance. So yes, that is our IRL, so our internal range liquidity. Keep in mind, the higher time frame, the more weight it holds, meaning that it's more likely to either get respected or not respected, or price not return back into it, because price sometimes doesn't, and that's another thing that you will learn along the way. I'm not going to explain it right now, but pretty good. So as you can see in the bullish, what did price do? Price made a swing high, meaning that now we know that there is liquidity, buy side liquidity, resting at the swing high of that move. So price is going to now retrace back into some type of imbalance in that dealing range, so in that long impulsive move, and come show some kind of support and make a point of interest for bullish buys or bearish buys. Right? So price is going to return into here, and in here we are looking for price to show resistance, also support, and come back and seek that external range liquidity. And we want to see that just happen over and over and over. Price is obviously not going to do that, but most likely we'll see maybe 3, 2, and then that's when we see another. It's kind of like that. The market moves in that type of way. External range liquidity, internal range liquidity, external range liquidity, internal range liquidity, external range liquidity, internal range liquidity, blah, 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 blah. So that happens. So the market is moving in external to internal. Easy. Look at your charts. Make sure that I'll show you guys in the charts also, not just little drawings and stuff, because that's another thing that confuses the fuck out of me, is when people are trying to teach something and all they show you is lines. Alright? So we covered a fair value gap. A fair value gap, it's pretty much when a series of candles, bullish or bearish, make an imbalance, meaning that the wicks don't touch, and it makes a imbalance, a fair value gap. We can see that both in bearish and bullish. Sometimes we're gonna get maybe a bullish and a bearish, or a bearish bullish. For high probability, we want to see all the same candles moving the same way. So if we're bullish, we want to see 3 bullish three bullish candles. If we're bearish, we want to see 3 bearish candles. If we see, for example, 2 bullish candles and 1 bearish, we can anticipate that that's not a strong candle, and we're going to come back into the fair value gap, and we are now going to be looking for that price, that level, to be respected. And that goes back to, again, like breakaway fair value gaps and all that sort of stuff, and I'm not going to get into that. So we have now an understanding of IRL, so internal range liquidity, right? So that is one point of liquidity that you can look out for your levels, for your key levels. What is another? And then we also have external range liquidity. So in this case, I wanted to show how this makes swing low, swing low, swing high, external range liquidity. But in that same process, price is doing something even more, like something that's going to help you out understand your own liquidity. It's making failure swings, meaning that these swing lows are being left unswept. If we're going into a lower time frame, we're most likely going to see this. The price goes up, comes back down, makes it low, gets swept, and then we see the next move. But sometimes price is going to make something like that, a fairly swing low, and it's not a complete sweep. See what I mean? So see how in that move there, price swept, but in this move, price didn't. So think about this as low resistant liquidity, meaning that if you're looking at it in the lower time frame and you see heaps of fairly swing lows, you're going to understand that price is likely to hit a key level and then come back down and hit this point of liquidity. Understand? Capiche? Ooh, easy. Same thing as swing highs. It's the same shit, right? Now this is the more trickier part. I don't know where the London Square went. There was a London Square here somewhere. I guess it's gone. Let's just make it real quick. So one thing that is a little bit harder now to understand is time-based liquidity. So we need to understand that there is 3 sessions in the index market, and it's pretty much every market, but let's go with the index market. So then there's the Asia session, London session, and New York session. New York AM, New York PM. This areas of price action hold high levels of liquidity, meaning that there's large orders, right? So there's order. So for example, what do I have here? So price, again, let's think about it this way. In the higher time frame, what is price doing? Price coming up, coming back down, and then coming back up. So what is price doing? Price has made a push up. In that push, it is likely that we saw some kind of imbalance, and price has made also a swing high. So it has made a point where price is likely to draw back to. So let's think about maybe a daily, and then we think this is the daily and this is 5 minutes. So this is what's happening in the day. Asia made a high, made this swing high here. Those failure swing lows are drawing liquidity. There might be imbalances in there. So then the London session pushes price down. And then what do we see in the New York session? It makes that strong sweep. And then we see that continuation seeking the Asia highs. And yes, price is going to present itself in very different ways. And there's daily profiles that you could learn. Definitely helps to understand. But basically, bro, who's calling me, bro? Don't call me right now. God damn, bro. Getting phone calls from everywhere. Sorry. Okay, cool. Look at this. Now let's go into the charts and look at some liquidity, right? So let's go here, right? So we understand that price is drawing. Let's go this one. This one's a little bit easier because we see change of state delivery, blah blah blah. So what did price do? Price comes back in and we trade back into this IRL, right? We sweep liquidity, so this is past lows, where we are seeing lots of sell side liquidity, and price makes a change in state delivery. So at this current point in time, we are bullish, right? So we are bullish, and we have made a fair value gap where we are anticipating for price to trade back into. So that's going back to the external range liquidity, internal range liquidity. That's all you really need to know. Like, just tap that into your head. Like, all these other liquidities are going to help you understand where price is likely to go and where is our main points of interest, right? So we got buy side liquidity here. As you can see, these are failure swing highs. Why? Because price did not sweep them. As you can see, what did that do? It made a relatively equal high. Okay, but price did sweep that. So that is a strong sweep, and that is why we likely saw that return back into the IRL. You got to understand that liquidity moves the market, and when we see sweeps, it's likely that we're gonna see the market move, and that's kind of what we saw here as well. So price came back into this, and it's happy days. We are following our strategy. We are following what we want to see. So let's go into the 15 minutes, right? Rock your butt. Bro, this house is making some weird noises. Oh man, it's been chaotic. I'll tell you that much, lads. So let's go with the 9:30, right? So now, you know what? Let's talk about a little bit about fucking time-based liquidity and how trading different Asian sessions is gonna also help. Bro, this is literally what I just drew up before. Is it not? That's crazy. Alright, anyways. Oh, it's a little bit, so again, you gotta follow your profiles, but it's a London reversal and New York continuation. Likely to see more New York reversals and continuations, but you do see a London. When the market's bullish, you'll likely see something like this. So in the Asia session, we have made fairly swing high, fairly swing high. So we know that these are going to be points where price is going to come back into. We can mark this one also because that's a fairly swing high. So Asia, London, and we have traded back into that. So now we're in the London, we saw a strong push this day. But what did price do? Price made that swing high in the lower time frame, and now we're looking for price to make a strong propulsion out of this. So we can see that made a strong order block sweeping previous lows, and we are now 930. Boom. Right? We know what we need to do. We would have entered. We would be looking for entries. That's a fair value gap. We're most likely to get some kind of retest into that. Most likely not. Sometimes we don't. Sometimes we do. That's why it's so important. So for example, we're not talking about entries or anything, but you get the point. We're most likely gonna now trade into that. For the fun of it, I would have probably entered my trade here and just covered my stop loss there, and that's kind of what I would have done this day. And we don't see it that day, but we do get a nice 0.52 gain. So that's a good example of how time-based liquidity, fairly swing lows, fairly swing highs, external range liquidity, internal range liquidity all play a massive role in getting our strategy from here onto the charts and executing. Just repeat, rinse, and just keep doing it. Just keep doing it. Just keep practicing. If you are able to get all these terms figured out and in your mind, and you can get a full understanding of this key liquidity concepts, you might improve, and that's what happened to me. So yeah, I don't know, man. I thought I'd give this a go. Let me know if this helps at all. I would like to teach a lot more, but I don't know. I'm busy, bro. I'm busy as fuck. I'm working. Gotta make the moolah. We make money. We grinding, son. But yeah, going to Bali tomorrow. I'm thinking of making a vlog. Let me know. I think that'll be sick. I'll be probably still on the charts. I might do a little video. Maybe we can do a little order flow. I don't know. Order blocks. I don't really use order blocks. It's kind of like a discount pity rate. Maybe we can talk about discount and premium. That's something pretty easy. Something that might help you get an understanding where to look for your trades and what to look for, not to FOMO. But yeah, anyways,